Hey guys, it's Preston Vanderbilt here, and I'm back with a variation of an interesting technical analysis-based trading strategy known as fencing. Now, as many of you know, last week I incorporated this variation of fencing into my binary options signals group, and as a result, many of you had some great success with this fencing variation. So I'm here today to share a video further discussing this binary options trading strategy and what you need to know in order to properly implement it into your binary options trading. Now, for those of you who aren't too familiar with this binary options trading strategy, traditional fencing is a trading strategy where it was first designed as a risk reduction trading strategy where the investor places two opposing binary options investments on the same investment. So in this case, the trader would execute a call and a put investment in order to fence in the price of the asset, hence the name fencing. Now, ideally, you don't want to execute a fencing investment back to back where you're creating a minimum fencing area, but you'd rather want to establish a strong high and low support level where you would then place your fencing investments once your assets hit one of those high or low support levels. Now, unlike the traditional fencing strategy, the variation that I use does not require fencing on your targeted asset. So even though we aren't necessarily reducing our risk here, we are still executing highly profitable investments since we're only placing our investments once our assets hit one of those targeted high or low support levels. Now, the formula that we use when calculating our call support level is as follows: the daily low value to our past 7-day candle closing values divided by 7. As you can see, we have the Euro USD on the charting solution, which is freestockcharts.com, by the way. And when doing this formula, we start from the previous day. So since I started this on the 3rd of December, that means we would be starting with the formula from the previous day, which would be December 2nd. When you left click your mouse and scroll over the charting solution, you should be able to see the candle's opening value, its high value, its low value, and its closing value as seen in the video. In order to properly do this though, you want to make sure that your time frame that you have set up on your charting solution is set up to daily, so that each candle that you are seeing is set with the daily value. As you can see, the low for December 2nd was 1.05508, so we go ahead and put that value to start off our support level fence. Now, in order to complete this formula, we need to find the average of our past 7 candle closing values. So we'll go ahead and scroll across December 2nd all the way to November 25th in this instance and add all of our daily low values and then divide it by the total amount of days that we're doing. So in this case, it would be dividing by 7. So if you calculated your math correctly, you should have gotten a total cumulative value of 7.41901. But when you divide that by 7, you should get 1.05986. So this means that our put support level ranges from 1.05508 to 1.05986. Our put support level is quite similar to our call support level formula, and it is as follows: the daily high value to our past 7-day candle opening values divided by 7. Now you start the exact same, so in this case on December 2nd, you do the 7 previous days. The value that you should end up with is 1.05926 to 1.06078 for our call support level. Now, since this is a strategy that we implement during the beginning of our investment day or beginning of the major trading session, it is highly important to remember that after the first initial high or low for the day has occurred, then we avoid placing a call or put investment. This is the only stipulation that must be followed when using this trading strategy. Otherwise, it is relatively straightforward and quite a successful trading strategy, as many of you have already been experiencing. In fact, I've received over 20 emails from people who have been thanking me due to their high success with the simplistic variation of fencing. So I would just like to take a short moment and thank all of you for those of you who have been sending me updating emails. It has been amazing and wonderful to read. Anyway, guys, this pretty much sums up my fencing variation trading strategy. If you would like the hard copy of this trading strategy, please feel free to send me an email at PrestonVanderbilt@gmail.com. As always, if you have any questions, comments, or suggestions, please feel free to leave them in a comment below or contact me through one of my following contact methods provided below. As always, guys, thanks for watching and make sure to stick around for more videos to come.